Ever since Bitcoin's initial release in 2008, Bitcoin has done some wild price movements in the market. You've seen it in the news. In 2018, Bitcoin skyrocketed up to $25,000, and in 2019, it went back down to a low of $4,000. And now in 2020, well, it sits at $26,000, and who knows what it's going to end at by the end of this year. Depending on when you're watching this video, you're going to be looking back at Bitcoin as either the biggest sham in history, or you're going to be inching yourself because you didn't participate in one of the biggest stock market rallies in the history of mankind. This year, cryptocurrencies have been going absolutely nuts. And we're going to go and talk over about what exactly it is, why people are investing in 2020, and ultimately, should you invest or not invest in Bitcoin and cryptocurrencies in general. Without further ado, let's get right into it. First, let's get some terminology out of the way. You've probably heard about Bitcoin and you've probably heard about cryptocurrency. So what you need to know is that Bitcoin is a type of cryptocurrency, and cryptocurrency is the asset class itself. By asset class, we mean stocks, bonds, gold, and silver. These are all examples of asset classes. And cryptocurrency is the umbrella term that encompasses all of these different cryptocurrencies, such as Bitcoin or other contenders such as Ethereum and Litecoin. We'll be referring to both Bitcoin and cryptocurrency in this video, so it's important to clear that up first. But very much in news medias and articles, you often refer to them spoken as one and the same because Bitcoin currently represents a huge share of the entire cryptocurrency market capitalization. Now, there's a lot of different definitions of cryptocurrency and Bitcoin floating around, but I like to think about it as a different type of currency. It's a type of currency that's secured by cryptography, hence the name cryptocurrency. Bitcoin was founded in 2008 by an undisclosed founder called Satoshi Nakamoto. And his initial premise of Bitcoin was to create a decentralized currency free from government control. And what does this exactly mean? So the fiat currencies that we use today, such as the Canadian dollars, the Great British pounds, the US dollar, Australian dollar, yen, etc., all of these currencies are controlled by the government. They can use the central bank, and they can also use monetary policy to control the currency in both the supply and the demand side. In the case of Bitcoin, there's only 21 billion coins that can be mined into existence. Once the 21 million are mined, that's all you can get. You can't just simply go out and print more. This is the type of currency that's actually controlled not by the governments, but controlled by all of its users itself. And that's kind of why you hear the term peer-to-peer. It's controlled by its peers, not by any singular person, but by everyone. Now, cryptocurrency is a new way of thinking about fiat currencies. It's a new technology. It's a new medium of exchange. And with such new technologies, there's always going to be new supporters and new criticists as well. What are some of Bitcoin's supporters' rationale for investing in the Bitcoin as well as other alternative cryptocurrencies? I think that there are three main ways, although these are not absolutely exhaustive. They're pretty good indicators of why the price has been shooting up in 2020. Well, one is its natural scarcity, which is a supply and demand problem. Number two, it's the increased public adoption of cryptocurrencies. And three, it's the political, social, and economic speculation that has been going on. And we're going to go over each one in a little bit more detail. Almost all business problems and investment opportunities can be broken down into supply and demand. And the same can be said for Bitcoin. When you think about what exactly price is, it's really the tension and the relationship between the buyers and the sellers. Whether there are more buyers or more sellers or less buyers and less sellers, that all influences the price in the middle. Now, we talked about the fact that the supply on Bitcoin is constant. And once the maximum number is mined into existence, there cannot be any more to be made. This gives it the same principles such as gold, where gold, there's only a finite number in the world. You can't just create it in a lab, just like plastics or other renewable technologies like solar energy or electricity. You can't just make it into existence. And that gives it a natural scarcity, which means that it's a hedge against monetary inflation and a hedge against the printing of money. This is why you often refer to Bitcoin as digital gold. Because of its natural scarcity, it protects against inflation, and because it is in a digital form, you get the name digital gold. In 2020, many of the governments have been printing many stimulus checks. Probably you have gotten one as well. And with the huge printing of money, it's not free. It comes with the cost of overloading debt and also risks of hyperinflation once the economy goes back to normal. And hyperinflation basically just means that you printed so much money that people don't believe in the dollar. And when people don't believe in the dollar, well, the dollar becomes worthless. So that's why Bitcoin and other cryptocurrencies are being more popular. People are resorting to this asset class as a potential hedge against this risk, while also profiting against this movement as well. So let's talk publicity. Just like a stock, when something becomes more popular, such as a Tesla or Google and Microsoft, throughout 2020, we've seen huge price increases. More users drives up more interest, which means more demand for the goods and services of that company, and then higher investor sentiment, driving up higher prices. Now in 2020, we actually had a few notable events in the cryptocurrency space. According to US News, Square announced the buying of 4,709 Bitcoins for $50 million, and also PayPal announced public adoption for the support of the payment by 2021. So there are also very special use cases for cryptocurrencies, such as international border transfers. You can transfer your money from one country to the other with far less fees than you would with traditional banks, where you would have to go through foreign exchange rates. And also, many different public companies have announced public interest in the cryptocurrency space, such as the financial institutions and the hedge funds, that they see potential in this asset class. Lastly, we're going to talk about political, social, and economic speculation. I know, it's such a mouthful. 2020 has been a tumultuous year with election complications, new strands of the pandemic, work from home policies, thousands of stimulus checks, many political challenges across Asia, and more. These types of events drive a lot of worry, a lot of uncertainty, and gives rise to contrarians against the government and the policies that govern it itself. The fact that Bitcoin and cryptocurrencies are naturally decentralized and detached from government control means that, in general, the more worldly conflict there is, the more uncertainty there is in the world, the more people will resort to Bitcoin and other cryptocurrencies as a matter of a last resort, as a hedge against this, for that matter. It is an asset class that works in its own sphere, in its own blockchain, and it's governed not by the few in government and politics, but governed by everyone who owns the asset, which we mentioned before. There's also a large interest, let's be honest, by people to make a quick profit. You've seen the millionaire stories. I bought Bitcoin and now I'm a millionaire. There are many, many cases of that. And it happens in every single asset class. It could happen in stocks and real estate. You could get rich overnight. No one knows whether or not this will actually make you a millionaire in a few years. No one would know. No one has a crystal ball that's that clear. But if Bitcoin, even as of now, is going to increase in adoption over the next few years, you can pretty much assume that with more adoption comes more interest. More interest will drive the prices higher, and it's going to be higher than what it is at the moment. So that really depends on your belief, whether or not you think Bitcoin is going to continue on its upward trajectory in terms of adoption, or whether or not it's going to stop here. This is its peak. I shouldn't touch it and let it go. To answer this question, we need to address some of the common concerns with cryptocurrency. First of all, it's not very easy to just buy Bitcoin from your local bank because it's decentralized in the government. You're going to be also buying these cryptocurrencies on deregulated exchanges and also holding them on your own personal wallets. Well, this means that it's very susceptible to hacking. You've seen it before, you probably heard it on the news. Once you get hacked, there's really no chance for recourse. It's very, very difficult. And because you don't have anything like a CDIC insurance protecting your bottom line if anything happens, well, that's a huge risk that you're going to have to be willing to take. Now, the second risk is that all these cryptocurrencies are just kind of like stocks. There's no guarantee that they're going to do really well. This goes for Bitcoin and it goes for other platform coins such as Ethereum, Cardano, or IOTA. These coins are all kind of projects competing for your money, and if they don't come to fruition over time, well, they're going to lose their value. So you have to be okay with that. And lastly, because these are such volatile assets, they move as easily as 100% up and as much as 50% down. It's a huge commitment, it's an emotional commitment, and you need to be ready for that. It's certainly not the easiest asset class to invest in, and it's not as secure as something like real estate or stocks. That's exactly why we're here. We're here to talk about, hopefully to put you on the right track and to understanding the risks, to understanding why people are investing in it today, and whether or not your position makes sense to you. After watching this video, you want to be reflecting upon whether or not Bitcoin is going to be the right investment for you, whether you prefer alternative coins such as Ethereum, IOTA, or Cardano, or Neo, or etc., or if you just want to leave this investment altogether. And what I want to mention is that that's totally okay. It's not for everyone. It's high risk, it's high reward, and it's highly speculatory even as of 2020. Now, there's this quote I really like to end off with. He's an executive director at ARC36, which is a cryptocurrency hedge fund. He says, invest in assets you understand. Before you invest, he recommends that you perform your own due diligence. Don't take advice you met from the person you just met at the bus stop for 5 minutes, and take control of your own financial decisions. If you do end up losing money, you want that to be on your own accord because of your own judgment and not because of someone else's. Financial independence is a very, very important topic that I think anybody of any age should be thinking about. And with that being said, these videos are meant to be the premise for educating that bottom line, and I hope you gained something from that today. Well, that's the end of the video. If you enjoyed it, I would really appreciate a thumbs up. It does take a lot of time and research to put this video together, and it's a very exciting first video for me, might I add. If you want to see more content on the lines of technology, commerce, and design, there's going to be way more to come, and I hope to see you guys again soon. With that being said, take care, everyone.